Now is the time to go all in on Bitcoin. We're going to go over in this video where Bitcoin is at, some narratives to look out for going into 2024. We're going to talk about the ETF, new accounting rules, who's going to be buying and holding crypto. And also, this will be a video you can share with your family and friends around the holidays when they ask you, why are you so bullish on Bitcoin? And Bitcoin has been on an absolute tear over the last 1 year, going from a low of $18,000 to $43,500. Now, we know Bitcoin is very sensitive to macro, as are a lot of risk on assets. What is one big thing people are worried about? That is inflation. A narrative that's going to play out is inflation. We beat inflation. The Fed has already come out and said it. Near-term expected U.S. inflation at more than 2-year lows. This is what the New York Fed says. And also, as you can see here from the chart, we peaked on inflation back in June of last year, and it has been down and to the right ever since. So the narrative of the Fed's going to continue to tighten, inflation is high, that narrative is slowly going away. Let's take a look at consumer debt, okay? And I'll tell you why this is important to the narrative of Bitcoin moving forward. Credit card delinquencies continue to rise. Who is missing payments? U.S. buy now, pay later splurges raise holiday debt hangover. And then charge-offs, right? So when you don't pay your credit card and the credit card company sells your debt to a debt company, they essentially charge that off and get that money back. They write that down on their taxes. Now, a lot of people have been putting money on their credit cards when inflation started to skyrocket last year, right? People they are ready to hit the reset button. They are not paying their credit cards. They're using buy now, pay later. We're expecting the government to start loosening up monetary policy. And this is going to be a fresh start. And what better asset for people to get a fresh start into to get 3, 4, 500% gains than Bitcoin and the crypto markets? And that is what I believe a majority of people are going to do. If I was in that position, that is exactly what I would do. You're not going to get 300-400% gains in the stock market, in the S&P 500, in commodities, in gold and silver. There is one single asset class that can literally get people out of debt in 1 year, and that is Bitcoin. Don't let anyone tell you otherwise. Now, I spoke of loose monetary policy. The Fed is already talking about rate cuts. Fed sees lower rates in 2024 as inflation fight winds down. Then we have this headline. So Goldman Sachs thinks we're going to get 5 rate cuts in 2024. 5 rate cuts. Now, why is a rate cut so important? What a rate cut essentially does is make borrowing money cheaper. And as people borrow money, they do things like pay down their credit cards, buy new things, invest in crypto. We saw what happened in 2020 when people were airdrop money and liquidity was rushed into the markets. People rushed into the cryptocurrency markets and saw Bitcoin go from $3,500 to $20,000. Are we going to see something similar here? I believe so. If you take a look at the CME, over 72% think we're going to get 2 rate cuts by May of next year. May of next year, which coincides with the Bitcoin halving, which we'll get here into in a second. So borrowing becomes cheaper. The Fed wants people to spend money. They want to spur the economy, right? We've been able to keep an unemployment rate down low. Well, now it's time for people to start spending money. The last thing they want is deflation, for prices to start going down and people not to spend money. What is another big thing happening in 2024 that happens once every 4 years? That is a presidential election. Look at this. How does the stock market perform in election years? I want to point your attention to this chart right here. This is all 4 years of a presidency and how the stock market performs. Third year, stock market typically on average goes up 91%. In the fourth year, the election year, 82%, especially when you have an incumbent running for a second term. The last thing they want is a crappy economy. They're going to do everything in their power to make sure people's portfolios are green, people have money to spend because they want to get reelected, and 2024 is going to be no different. Now, what are some big catalysts for Bitcoin? Well, one that happens every 4 years is the Bitcoin halving, and we're a little more than 118 days away from the Bitcoin block reward being literally cut in half. So we take a look at what everything I talked about, right? Demand coming in, and now you have supply shrinking by 50%. That is what I call, my friends, a demand surge. We have this as well. Marathon, which is a publicly traded Bitcoin mining company, gears up for the Bitcoin halving, buys 2 mining sites for $179 million. A mining company is spending $180 million because they know what is right around the corner for Bitcoin and the price. Then we have this: Bitcoin could reach $160,000 in 2024 on the back of a halving, and the spot ETF, which is the next thing I want to talk to you about. A Bitcoin spot ETF. Essentially, what this is going to do is it's going to allow people in the traditional world, people who have 401ks and IRAs, to be able to have direct exposure to Bitcoin. A futures holds no Bitcoin in the trust, but a spot ETF, for every $1 that someone buys a spot ETF, they have to go out and buy $1 of actual Bitcoin. That is what makes a spot ETF so important to the price, is it is physically backed by Bitcoin. BlackRock, NASDAQ, and the SEC are meeting regarding the Bitcoin ETF. We have close to, or a little over, a dozen filers who have filed for an ETF, and this thing is just getting started. You have BlackRock, who has only haven't gotten approved on one ETF. Out of 576, only one has not gotten approved. So we are betting on BlackRock. And then this is from Bitcoin Magazine on Twitter. $9 trillion BlackRock has made receiving an SEC approval for a spot ETF, quote, a key corporate priority. And I don't know about you, but when the world's largest asset manager, the company that governments call when they need help, when they say this is a corporate priority, you'd be kind of stupid to go against them. And then another massive one is this new FASB accounting rule. New accounting standard may increase investments in crypto assets. And here is a video of Michael Saylor on CNBC speaking about why this is so important and why companies like Apple and Berkshire Hathaway could potentially be wanting to hold Bitcoin on the treasuries.
Joining us now, though, is Michael Saylor, MicroStrategy Executive Chairman and co-founder. Michael, it's great to have you on the show.
Yeah, thanks for having me, Morgan.
I do want to start right there with the regulatory landscape. The fact that Coinbase is now filing a petition in federal appeals court requesting review of the decision by the SEC. Is this the type of situation that could impact Bitcoin or impact the type of work you're doing at MicroStrategy?
No, there's a lot of uncertainty around the rest of the crypto ecosystem, but the one certain element of the ecosystem is Bitcoin is universally acclaimed to be a global commodity or an asset without an issuer. Mm-hmm. So the one thing we can count on is Bitcoin goes forward in the year 2024, and a strategy built around Bitcoin is generally a pretty safe one for institutions.
New rules, speaking of regulations, recently announced by the Financial Accounting Standards Board, the FASB, that are going to require companies to account for cryptocurrencies like Bitcoin at fair value. Set to go into effect, these rules, in the next year or so, but companies can begin to apply them earlier than that. How is that going to affect MicroStrategy?
You know, we welcome fair value accounting. It's gonna create much more transparency and clarity in P&Ls and balance sheets for any companies that are holding Bitcoin. I think the real significance is that there are companies like Berkshire Hathaway and Apple Computer that have $100 billion plus in cash. And right now they have to invest it in treasuries and sovereign debt. And with this change in fair value accounting, you're going to have a commodity that's valued as fair value, and it becomes a legitimate treasury reserve asset for publicly traded companies.
Imagine that. A $2-3 trillion company that is going to have the means to hold Bitcoin as a treasury asset. With this new accounting rule, previously, companies had to sell the Bitcoin that they held to be able to show it on their balance sheet to use it to raise money or issue more shares if they're publicly traded. With a new accounting rule, they can take the fair value at the time and they can add it to their company valuation. That is literally going to change the game of who decides and why they would decide to hold Bitcoin as a reserve asset on their balance sheet. So many things are lining up for Bitcoin. And then we look at, well, Bitcoin is often compared to gold. What happened when the first spot gold ETF went live? Well, it only surged about 350%. That is a 3.5x for Bitcoin. If you take a look at the gold chart, so this is when it was approved, and at the time, gold was choppy, but up and to the right slightly. You saw here, after that, we entered a massive year-long, decade-long bull market. Now we know with Bitcoin tends to move a lot faster. So we're going to have demand come in. We're going to have the block reward get cut in half. Why do we think we're going to see such a massive price in Bitcoin, and why this is the right time, the only time potentially to go all in on Bitcoin to get it as cheap as $43,000? Take a look at these HODL waves. This shows the amount of wallets that are holding Bitcoin in purple. These are wallets that have held for more than 10 years. And as you can see, this mass area is growing larger. But I also want to point to the 1-year Bitcoin HODL wave. Over 70% of people that bought Bitcoin 1 year ago have not sold. These are people who bought Bitcoin at the bottom at $16,000, $17,000, $18,000. Why in the hell would they sell their Bitcoin now when they've held through a pump to $25,000, a pump to $30,000, $35,000, even $44,000? They have still held their Bitcoin. So now you have supply getting cut in half. No one wants to sell their Bitcoin, but these ETF companies are going to have to go out and purchase it to satisfy their ETFs. Guys, if that doesn't make you bullish, I don't know what the hell does. Now, taking a look at Bitcoin, we have been in a bull market all year long. Only 3 out of the 12 months so far have been red for Bitcoin, with December coming in at 15.5%. But I believe this number is going to close closer to what October saw and what January saw. Now, Bitcoin on the weekly, I believe Bitcoin is going to get to $50,000 to $54,000 by the end of the year. And here is why. This is Bitcoin on the 1 week. I decided to take a look back to this October of 2020 leading into the end of the year. We saw 7 green consecutive candles. We saw a little bit of consolidation, a green candle consolidation, and then we saw a massive move up. Well, what are we seeing here? This is currently 8 green candles. Not only consolidation, but we actually dipped about 3, 4, 5%. We're seeing that second green candle. And my friends, after that second consolidation candle, we saw a price appreciation of Bitcoin of about 25%. If we average that out from here, we're looking at a $54,500 BTC. Guys, again, if this doesn't make you bullish on Bitcoin, I don't know. Well, if there's ever a time to go all in on Bitcoin, it is now, with the ETF coming in January, with the halving coming in April, with the election, everything I just went over. How can you not be bullish on Bitcoin? We hope you liked the video. Share this with your family and friends as you're discussing it around the Christmas tree opening presents. And on the way out, make sure to like the video, subscribe to Sin City Crypto, and come check out our live show Monday through Friday at 2 p.m. Eastern Standard Time. We'll see you in the next video.